Good morning, good morning, traders. Good morning, investor, from wherever you're joining this from, every part and corner of the world. My name is Kefa Eric, your market analyst here at HFM. HFM, your number one broker in Kenya and beyond. Now, as we anticipate more members coming in, we could proceed. We have had quite some interesting economic data coming out, and our focus is going to be in the interest rates data, which came out yesterday from the United States. At the same time, we had the Bank of England also print out data for their interest rates. And interestingly enough, both the Bank of Europe and the Feds, or the Federal Reserve, had an interest rate cut by 25 basis point, or a quarter rate cut, as we are going to demonstrate. Then secondly, we are also going to demonstrate the effect this has had on the financial markets. And before we go into that, I would like to articulate that it is important to remember that the Feds have three major roles. Number one is have a balanced inflation. Their balanced inflation is categorized to be at 2%. And they have had to come a long way, because right now it's trading above 2%, so they want to keep cutting that interest rate to get to that particular benchmark point. Number two is to ensure employment stability, which will foster economic growth in the long run. Now, when Feds cut interest rates, they do this so that people can borrow cheap money. When people borrow cheap money, it has a booming effect on the economy, increasing the circulation of money. More people get employed, which means the wage growth is steadily in an growing trajectory, which is good for the economy. All focus on the Feds now. We see here the previous was at 5%, and the actual was at 4.75%. The consensus was at 4.75%, which would clearly see from the previous and the actual we had a 0.5 basis point cut, or a quarter basis point cut, if you may like. Now, the effect this would have on the financial market will see a little bit of strengthening of the dollar in comparison to other pairs that it's paired with. Interestingly, could see this, we have projected this today on the currency strength meter, and would move forward to see the effect this would have on the charts now. Share my charts. Okay, I hope everyone can see my charts. Just a minute. Share. Just a minute. Just a minute. Just a minute. Okay, coming up. Coming right up. Is it? Very nice. If you can see my chart, kindly comment C or good morning. You could just comment C so that I know we are on the same trajectory. I will entertain the question, Vicky, is immediately after. Don't worry. if you can see, nice, say see, very nice. If you can see the chart, kindly comment C so that I know we're on the same page. Very nice, very nice. All right, we could proceed. So, having in mind that the Feds cut their rate, this would affect how banks borrow from each other, would have an effect on how the citizens borrow money. Now, to see a reflection of this, beginning with our usual suspect, Euro USD, we see that yesterday EURUSD had quite an interesting chart print. But overall, we see that price is trying to move in a bearish manner, suggesting strength of the US dollar. Now, we see a building block on the strength of the US dollar. At an indication would see moving forward, so it would be safe to trend with the direction of this. Remember, economic data is able to give us market direction, and then technical analysis or areas of interest would give us entries and exits. So a transition of this to GU on this particular asset, we see interestingly price is consolidating. Why is price neither moving up or down aggressively? This is because they, remember, in Bank of England also cut their interest rate by 0.25 basis points. So we see some sense of tangle between these two. We would want to see more economic data coming out from this particular pair for it to give us a much more needed perspective. Moving on swiftly on the AUD USD, we see that yesterday it closed a little bit bullish, but with the coming out of the interest rates, which would give a little bit impetus to the US dollar, would see price having a continuation of the down perspective. But of course, this is in view of upcoming economic data from Sydney, which is the capital city of Australia, giving us much more needed data for to have a bias on that particular asset class. Moving on swiftly on the USDCHF, we see that price has finally broken above a major key level at 0.87425, indicating even price giving us a much more needed move to the upside. We shall be looking out for that. Moving on swiftly for GU, for USD JPY, we see interestingly that price broke above as anticipated. Now we see it is trending much more higher, or respecting key levels, which is what we would like to see. Nice, very nice. Suggesting that the US dollar is stronger than the JPY currently now, obeying we see there both fundamental analysis and technical analysis working hand in hand, and that is what we like to see. The consolidation at USD CAD broken yesterday from the daily time frame, and we see now price wanting to print even much more higher as we anticipate more economic data coming out. These are much more beautiful scenarios when you see fundamental analysis aligning with technical analysis. For GJ, we see price broke above the key level here, and price wants to keep printing price to the upside, which is good. Would like also to see it come and break above a certain key level here. A minute for it to give us the much more needed confirmation of price moving to the upside at 199.519. For precious metal gold, we see yesterday we had a clearly bearish scenario, which is okay. Welcome guys to the ones who are coming in. If you have missed out, do not worry, you can find this video on the HFM Kenya YouTube channel at HFM Kenya. Kindly like, subscribe, and click on the notification button, so when you miss the daily morning market watch, you can jump on the YouTube channel and just have a recap and see this information playing out in real time. For precious metal gold, we see gold interestingly having a bearish run, or in a downtrend if you may like, which confirms the US dollar strengthening. Remember, now we are seeing a building pattern of the power of the US dollar, and the Fed's cut yesterday increased people borrowing ability, because when Feds cut their rates, banks borrow from each other cheaply, which would have an effect on the economic growth. When people have borrow money cheaply, they're able to enter into businesses, which creates much more employment. So as we move forward, we shall see these scenarios playing out. Before we conclude, Vicky had asked, I have a question. An increase in interest rates strengthen a currency. Why is the dollar strengthening with? See that clearly. Why is the strengthening currency, but why is the dollar strengthening with the decrease? Let's understand it this way. Interest rates, number one, what are interest rates? Interest rates are the rate at which we, beginning from our context of the citizen, at the rate at which we are able to borrow loans from. Now, when the interest rates are cut, people borrow more money. When people borrow more money, it circulates much more in the economy. When it circulates much more in the economy, it is able to have hastening growth on the economy, where we see more people growing, more people are growing their businesses, more employment, which would mean a steady growth in the curve of wages, and this would have given impetus to the pair in question. Remember, identifying the key roles of central banks in this context, the Feds. Just understand that they have to keep a balanced inflation. What is inflation? The prices or the appreciation of prices of household goods and services, which can be categorized to household goods, mortgage, which or is house loan, or transportation, or if you may like, you might also categorize it as car loan. Okay, so understanding that, you'd also understand that central banks, or the Feds in this context, also has a second role, which is to maintain the strength of the labor market, and it does this by its monetary policy, where we see hikes or cuts, okay, with the standard placed at 2%. All right, so if you understand that, it becomes much more easy for you to apply it on the real charts. So guys, I think that's it for today. You can find this video on YouTube, on HFM Kenya YouTube channel. Kindly like, subscribe, and click on the notification button so that you are not left out. My name is Kefa Eric, your market analyst here at HFM Kenya. You are number one broker in Kenya and beyond, a broker with favorable trading condition, 24-hour support with awards in various jurisdictions in the world, indicating financial transparency. And of course, we have support systems to make sure you have a smooth running. See you tomorrow, the same place, the same time, to do things the same way that has proven consistency. Until then, God bless, take care. Thank you.